So, how much cash is it actually required when buying a business? I've heard everything out there from 0 down to 15% down and everything in between. But I tell you this, a lot of people really don't understand the buckets of cash that are required with buying a business. Have you considered closing costs? What about post-closing available cash outside of the down payment? So in today's video, I'm going to show you straight out of a buyer's requirement cash flow worksheet that I use with my students to understand exactly, eyes wide open, when you make an offer, how much cash will you need? Let's get to it. Everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you buy and scale a profitable business. Are a small business owner looking to increase your wealth by buying a profitable business, or an employee or corporate executive sick and tired of the rat race and wanted to leave it behind by buying a profitable business? You are in the right place. Please subscribe to my channel. Don't forget to hit the bell and you'll be notified every Thursday when new videos come out.
Okay, everybody, so this is the buyer's cash requirements planning worksheet. This is a tool that we use inside our group to calculate, long before you start looking at businesses, estimate based on the purchase price, what are the potential cash requirements are. And for illustrated purposes, we're gonna use $1 million, but we're gonna use different prices. And I'm gonna walk you through what you estimate to pay, not just the down payment, but incidental costs like closing costs. So it has some formulas embedded. So let me kind of take you through it. So let's say you find a business that has a potential purchase price of $1 million, to keep the math simple. And you can put any money you want for earnest money, depending on your interest, and it makes the seller feel better, the higher the better. But let's just say, for conversation's sake, that you're gonna put 1% down or $10,000 on $1 million purchase. What we've done, the rest is cut. These areas in blue are fillable. Everything else is already formulas. So say you put your $10,000 deposit with the letter of intent or the asset purchase agreement, whichever you've done. And I'm going to give you what a low estimate is and what a high estimate is. So as far as accounting fees in $1 million purchase, anywhere from $1,500 to $3,000 in due diligence costs. Attorneys can be a little pricier, so you can spend anywhere from $2,000 to $10,000 if you don't have a good attorney. So that's what I'm giving you, the range, right? You try to, and the cost is going to be somewhere in the middle, maybe $4,000, because what the attorney is going to have to do, they're going to have to work on the asset purchase agreement, in other collateral documents like holdback agreements, the employment agreements with the seller post-close. You may have other agreements. There may be the lease. The attorney may be, they may help you with the actual drafting of the lease, which is critical. If you're actually buying a business that has a lease in place and you're working with the landlord and drafting the lease, that's second to the asset purchase agreement. The lease agreement is probably the second most expensive. So I'm gonna say anywhere from $2,000 to $10,000. So that totals $3,500 in professional fees to $13,000 in professional fees. Then you got other fees. If you're buying a liquor store, you're gonna have or a restaurant with a liquor license, you're gonna have an ABC licensing fees. You're gonna have a business license. If you are dealing with a business that actually has withhold sales tax or charges sales tax, and you're gonna have to withhold the sales tax and then later pay it to the Board of Equalization, then you're gonna need a deposit. It could be anything from $100 to several thousand, depending on the volume transaction and the estimated sales tax withholdings every month that you're taking in from the customers that are actually buying your services or your products. There's going to be some utilities. It depends. If you have a triple net lease, there's going to be definitely some utility prepayments that you're going to have to make. There's going to be some, if there is a franchise involved, there's going to be some franchise transfer fees, travel costs. There's going to be insurance and liability and property. You're definitely going to need life insurance. If there is an SBA loan involved, you're going to need life insurance to protect the loan for the life of the loan. 10-year term for $1 million for the loan should something happen to you. It could be anywhere from $750 to anywhere from $500 to $1,000, which is $750. As far as the general liability property, it's hard to estimate without looking at the type of business that is. It could be as little as $1,000. It could be as much as $3,000 for the policy. We're gonna say just $2,000 here, just for keep the numbers. There's no, you can have utilities prepayments. You may have, maybe I don't know. It's hard to say, how much, what the square footage is, the consumables. We assume about 2,000 square feet of office space. Maybe you have about $300-400 of consumption. We're gonna say maybe 500. Let's just say this business has no sales tax. You're going to incorporate, if you don't already have a new code that is going to hold the assets of the business you're purchasing, then you're going to have to incorporate, and that can range anywhere from $1,000 to $2,000.
Stuck and trying to figure out what to do next when evaluating a business. What would be the ideal price to pay? What about available debt service or post-debt service cash flow, cash on cash return, debt service coverage ratio? Should you talk to a lender, or should you start looking at deals before? Should you do on market or should you do off market? All the questions that you have, I'll be happy to answer. We need to connect. I'm looking for people to work with. So you can either drop me a comment below or just send me an email. You can send me an email. My email address will always be up here. Let's connect.
Let's see, 4,000 here. Okay. SBA lender application fees can be anywhere from $100 to $1,000. It's something that you can shop around and as you talk to the different lenders. So as far as escrow is concerned, you may have anywhere from $5,000 to $14,000 in fees. There is escrow fees. Usually the buyer and the seller paid their respective escrow fees, and let's say on average it's about $800 just for the handling of the escrow. It could be as much as $1,200. You may have prepaid rents of anything from $0 to $7,500. And then you got the remainder of the down payment. Now, in this case, it is assuming that is a 10% down on $1 million purchase, right? Of which you put in an estimate of, earnest money of $10,000. So the difference, or $90,000, it will be what you bring to the close of escrow. That satisfies your equity injection. And if you put $20,000, well, then it would be $80,000 that you need to, whatever. So the earnest money is basically your down payment in advance, a fraction just to show good faith, which is fully refundable if the deal falls through. As far as the earnest money, the deposit. Now, if you're buying equipment, normally there are some, depending on the type of industries, there will be assets associated. It could be equipment. If you're buying equipment, and depending on the allocation of the purchase price, so on $1 million purchase, maybe $200,000, maybe $300,000 as an equipment. On that, you're gonna pay sales tax on the furniture, fixtures, and equipment. Furnitures, FFFE, furniture, fixtures, and equipment. You can as much as $20,000. That is the sales tax associated with the equipment portion. The rest is usually goodwill, which is non-taxable. So, are you trying to get the picture? Post-closing, there may be some stuff. We're not gonna bother with that so much. Now, what happens if you are really shrewd and you find a business and you don't have any post-closing liquidity? Say that only the money that you really are set on buying $1 million business, of which you are required to put in 10% down, but then you get the seller to carry maybe 5%. So if that is the case, okay, so I'll go back to that. So what I want to show you is that assuming that you put 10% down and no participation from the seller into the equity injection, then your cash required is $119,000 to $155,000. Your closing costs could be anywhere from $19,000 to as much as $55,000. It could be, this is ballpark, so it could be anywhere from 2% to 5.6% of the purchase price. A lot of buyers forget to factor this in. So there are three buckets of cash. So you got the down payment, you got the post-closing liquidity, and you got your closing costs. Now, that does not include the working capital. The working capital is usually, we want buyers to ask the seller to, everything is negotiated. You're not gonna get what you don't ask for if you ask for the working capital. So that's why we don't have working capital here, right? Sometimes the SBA lender often asks the working capital on the deal, depending on the strength of the deal. The debt service coverage ratio or post-debt service cash flow is good. Or we ask the seller to provide 1 month of working capital. That 1 month could be anywhere from $50,000 to $200,000. We don't know, and this is just an illustrative scenario. Say you were really shrewd and you got the seller. So here's one way that you can actually, instead of 10% down, you can narrow it down to 5%. Say you had the $100,000, but you wanted to keep $50,000 for post-closing cash required if needed, and everything is on a case-by-case basis. There's not a one-size-fits-all. There are a lot of assumptions in these calculations, but so you get the seller to do 5%, and you only have to come up with 5%. So instead of $119,000 cash required, you're down to $69,525. This is one way you can reduce your cash requirements, and the lender will be okay with that, depending on the lender, and every lender is different. If you are able to get the seller to carry 5%, so in this case it will be 5%, 5%, this is buyer, this is seller, and then you get 90% from the SBA to total 100% equity injection. So this is how you do it. And now I'll be remiss if I didn't talk about another option. So there is the occasional situation in which you can actually put 0% down and only worry about the closing costs. And when will you do that? If you are buying a like for like, if you are a business operator with a very strong balance sheet, and you're buying a competitor and who also has a strong balance sheet, and you have excess cash flow, and you're very cash flow positive, and you have great tax returns and great K1s and great 1040s for your personal tax returns, and the story makes sense, you could put down, but you don't have to. And the lender will say, you know what? Strong balance sheet, buying a strong balance sheet, you don't have to. And then you really are only down to your closing costs. That's how you do it. Hopefully this video is helpful to you guys. Feel free to reach out.
Limited time, I'm giving away my cash flow calculator and my buyer's checklist. These two documents together are powerful in the process of buying a business. And these are great things that I'm just giving away to my subscribers. All you have to do to get them is click on the links below in the Years to Keep. And if you have any issues with them, reach out to me. I'd love to be able to help you.